Hi, this is David Rumsey, CPA of Pettis, Rumsey, Inc. Many times my clients ask me, how long do I have to keep my records, Dave? It's taking up too much space. It's just too much to keep track of. I want to shred it. I want to take care of it, get rid of it. So time and time again, this comes up as one of the top questions I'm asked from clients, big and small, both individuals and business owners. The answer I give is probably not one you're going to want to hear. But the bottom line is tax laws require that businesses and individuals need to keep records to support gross income deductions and credits claimed on their both business and personal income tax returns. Businesses, this is particularly true as more and more businesses are being audited by the Internal Revenue Service every year, and a large percentage of those audits are based on having the records for them. You can also be audited by the Department of Revenue for the state of Washington. They too are looking to verify that you have receipts showing you paid sales tax, for instance, on various purchases for things used in your business. Without those receipts, the state will go ahead and charge you the sales tax whether or not you paid it or not. It just comes down to whether you had the records to show that you did or didn't. So that can be very costly, and we've seen that happen to clients before. So yes, record retention is very long in a sense and very important. So how long do you need to keep your records is partly a matter of judgment and combination of statute of limitations both for the state and federal. Number one, I say keep all of your personal and corporate partnership, LLC, tax returns, period. If nothing else, you have proof you filed. But all the back documentation, which is usually what's the largest amount of things to take up space, I will now just read a list of items that common and how many years we recommend to keep them. Bank deposit slips, bank statements, canceled or substitute checks, 7 years. Contracts, corporate stock records, permanent. Credit card receipts, employment tax returns, expense records, those are also should be held for 7 years. Financial statements, to me, are just like tax returns. Keep them forever, permanent. Inventory records, paid invoices, tax returns of other general, maybe to city localities, 7 years. Depreciation schedules, 7 years plus the life of the asset. So in other words, if you had the car or the van for 6 years, you're going to keep it for 6 years plus 7. Employee records, keep for the period of employment plus 7 years. Home purchase and improvement records, ownership period plus 7 years. So in other words, you keep all the records from the time you're in the home plus 7 years. I realize that the home laws changed a few years ago or years ago, and it's not as important to keep track of the improvements, but I always warn people that tax laws could change, and that may come back one day. So keep those records. Investment records, journal and general ledger, minutes of meetings, real estate records. There again, keep for the ownership period plus 7 years. I would be happy to answer any other questions. We offer a first-time consultation at no charge to you, no cost, no obligation. And if you have any questions on this type of issue as to how long to keep things, or there were certain things that weren't mentioned in this, feel free to give our office a call at area code 360-659-8502. Thank you so much for your time.